How can you invest and make money in today's real estate market? Welcome to the Successful Investor Show, where we talk with successful real estate investors, business owners, and busy professionals on their journey to wealth. They share their best ways and advice to make massive gains in today's market. Make sure you are subscribed so you never miss an episode. Now, here is your host, Doron Nissim.
Welcome everyone to the Successful Investor Show, where we talk about how to passively invest and create passive income and generational wealth. I'm your host, Doron Nissim, and today I have the pleasure to welcome our guest, Don Spafford. How are you doing, Don?
Doing great, thank you.
Don has been in the real estate market for the past 7 years, right?
Actually about 5.5 years, yeah.
5.5 years, but he's been in finance for the past 20 years. He's been buying multifamily properties. In 2017, he bought his first duplex and fourplex, and then he moved to commercial properties, and now he's into much bigger things, multifamilies and RV parks. So let's hear you talk about your background.
Yeah, so give a brief rundown. As you mentioned, my background is in finance, investment science, portfolio management. So more things around securities investing, like think of stocks, basically. That was my my education at the University of Nebraska at Omaha, kind of in the shadow of Warren Buffett there, basically. So I was kind of following his footsteps, trying to, and started investing in stocks. I actually bought my first stocks back in 2008, right when the market crash was starting to take place. But hey, there's an opportunity. So I bought some stocks very cheap and continued to buy some in 2009. But my plans, my goal for that education was I wanted to become a financial advisor and be a wealth manager or a portfolio manager for a hedge fund, for example. And seeing everything that took place during that market crash of 08 to 09, seeing these big companies now, shutting their doors, going out of business, or laying off, thousands of employees, I'm like, man, this is not as secured as I thought it was going to be, right? And on top of that, I guess if I was in that position and these people's entire retirement savings are now wiped out overnight, even though it's nothing I could have done directly to stop that, I guess, but I would still feel somewhat responsible and bad for them and all that. So I was like, I don't want that kind of headache and that heartache, I guess, that goes with that too. So I decided to not pursue that any longer at that point. So actually, and on top of that, there were no jobs anyway. So wow. The company I was already working for an investment company anyway, but I was on what we did is like a back office support for investment advisors. So basically, we were the backside of what they were doing. We would manage their clients' data, keep it balanced and organized, prepare their quarterly statements, that kind of stuff, but not directly working with the investors themselves. So I at least had that job. I was like, I'll at least stick with this for now. My job is secured. I've been there for a while at that point already. But as I was looking for jobs out there, anything that was somewhat related to finance, the only things I could see were accounting. So I actually decided to go back and get an accounting degree instead. I was like, well, maybe I can just get a CPA instead of the CFA. It still would be something decent and pay well. And so I went back, took the classes, got prepared to take the CPA exams, but then studied for them, but never took the exams because I decided I really don't like accounting. Even though I took the classes and everything, but I'm like, it was never my thing. And so around this time, my wife actually became a realtor in about 2011 when she got licensed. And so some of her very first clients were investors, and they were buying these properties in the time in cash, essentially doing the BRRRR process. For those who are familiar with the BRRRR, right, where you buy, rehab, rent, refinance it. And so that's what they were doing. And one in particular, I remember he was a lawyer. He got a line of credit on his business, so he'd use his business credit basically to buy these properties in cash, do all that process to fix them up, and then refinance them. And I was like, wow, that's very cool. I wish I could do something like that. I didn't have a business to leverage. I didn't have enough, income to do that on my own either. But at least got my mind thinking about, hey, I should find a way to do something in real estate. I actually did think that anyway, like in 2008 and 2009, when I saw, my friend lived in Florida at that time. He was saying, hey, these houses that were selling for, 300,000, a year ago are now like at 70,000. Wow. I was like, man, I wish I could buy those and just hold them, but I did not know how. I did not have the resources, and even at the time, I guess I didn't even understand how that works. I thought you just buy the house and wait to sell it later, like a stock kind of thing. I didn't think about you can actually put a renter in there, and then the renter pays your mortgage. So I was like, how am I gonna pay for that? But anyway, lessons learned, I guess. And so eventually, when I got to the point where I started to want to get involved and Again, around 2012, 13, I was like, okay, we got to figure this out and find a way to buy. At that time, we lived in Omaha, Nebraska, but my mother was here in Idaho, and so about that time we decided that we needed to move to Idaho to help take care of her because her health was going down and it was going to need some additional care. So we wanted to be close to her and help take care of her. So we decided to put all that on hold. Get our own house fixed up and sell it, and then we moved to Idaho. And so we moved here in 2015. After about a year or so of getting to know the area a bit, and again just learning more and reading, and I went to a one of those was called a guru seminar that came through town, and
Weekend.
and yeah,
Weekend seminar.
yeah, exactly. So I wanted to learn it, and this, of course, this was about house flipping, which is what most people think when we think of real estate investing, and it's in general, right?
Yeah.
And so I came to that and was like, hey, this is pretty interesting, but I was like, this where I'm at here, this is, especially that time, 2015 or 16 when this was, I guess. This is somewhat of a smaller market, so it's not really something you could really do to a large scale to buy a bunch of properties, undervalued and flip them and sell them for more. This market was not for that really at that time. And so, but at that meeting, I met a guy who was doing it. I guess he was already flipping houses, and so I asked him like, how are you doing it? Where are you getting the money from? And he had mentioned Bigger Pockets, which I before that never heard of. Just from the name of it, I thought this guy's just like a private lending platform or something where you get investors or something. Just from the name, I was like, that sounds interesting. So I came home and checked it out, of course, and learned, okay, this is like a website for investors to learn, and has podcasts and things. So I started listening to some of the podcasts and the webinars, and was just amazed that this resource was available, and I did not know about it.
Open your
And
eyes.
it would have helped me a lot, years ago if I'd have known it was here. But I started playing with their calculators, and that's where I was like, oh, wow, I can use this calculator to analyze properties even better, because make sure I don't make a mistake. And so, so that's really sold me on that platform, was just using their calculators really mainly. But I listened to their podcasts every day while I worked, because I still worked for that same company. I work from home now from Idaho. And so as I worked, I would listen to podcasts all day long. That was where my we'll say training and motivation got to really buy a property. And so, that was, so I went to that seminar in fall of 2016, joined Bigger Pockets, I think December of 2016. They had this like 90-day challenge, like they were, it took a challenge to buy your first property the next 90 days. And so I'm like, all right, but that was in January. My birthday's in March. So by my birthday, I want to find a property. And so I just every day was analyzing, analyzing all these opportunities, and getting to know the numbers, I guess, be familiar with the calculators and everything. And I eventually one day found this fourplex that I found actually listed on Craigslist. It was not listed through MLS. I come to find out later from the seller that he did list it prior to that, and I guess
couldn't sell.
Fall of 2016, and didn't sell. And I was like, that's weird. And it's like, there's something I don't know about this property, but it's like, well, whatever. The numbers looked great. It was a somewhat newer build, like I think built in '96, so it wasn't like super old or anything.
Wow.
And again, it met the 1% rule. It looked great. Great. He kept it up well. I'm like, all right, well, let me, I ran the numbers. It looked great. I was like, I got to give this a try, make this happen. So I found, again, luckily through those contacts on Bigger Pockets, I found there's a local lender in my area that does a 10% down payment on investment properties. So I did not need 25%. Like I thought from the books I read, they all said 25%. I was like, hey, I can just 10% down. And I learned that I could leverage my 401k. So that's essentially what I did. I took a loan from my 401k to buy this property using a 10% down payment. And it still cash flowed decently at the time, but I knew even then I was like, this is under market rents. I can get the rents up, cash flow more. I decided to self-manage it to save on those management costs initially. And I still self-manage now here, like 5 years later, or whatever, because it does well, and I learned how to screen tenants properly to get people in there that are not going to be problems. So that was my first start in getting that. Once I closed that first property, I was like, my eyes were open. I guess I was motivated to buy more and do more. But literally the night before closing, though, I was still scared. Right, this was still a big risk. I did not have a big savings. I did not have some big cash cushion to fall back on if something went wrong. Again, I borrowed from my 401k, so I'm like, if this goes wrong, I'm really screwed. So I was literally the night before so scared enough that I was like, maybe we should just back out, walk away, not take the chance, not take the risk. But I decided, what, my numbers are solid, my numbers are right. I trust my numbers. This looks great. I know I've got to get started. This is a great property to start with. I gotta give it a try. It's it's this or nothing.
Yeah.
My next option is bankruptcy. So I decided to take the risk. We closed on it, and like I said, literally the next day I was like, yeah, let's go buy more. I was got past that fear, and the floodgates were open. And so that was what really started me on that process to do more now with real estate. To now, 5.5 years later, after closing on that one, being able to quit my W-2 job and be full-time real estate now.
Wow. Wow, it's an amazing story. I mean, you started in 2007, 8 and the crash where actually everything was like going down and you saw everybody's losing money. And fast forward 10 years, almost 10 years later, you bought your first property. It's amazing. Yeah, and I actually started at the crash and I saw houses sells for 50%, 40%, 30%, and I was like, I wish I could buy more. So I mean, I love your story, and you always have your two hats, the financial advisor and the entrepreneur, and it's like you're debating what should I do? Go at it or keep running the numbers, look at it.
From the risk perspective, it's like, no, don't take the risk, it's not worth it. But from the entrepreneur side, I'm like, I gotta take the risk because we gotta make it happen. So yeah, that's a great point. Thanks. Yeah.
Wow, it's amazing. I mean, I like the story. So in all your journey, when after you bought your first property and everything went great, I mean, when did you decide that I'm gonna go full at it and I'm gonna maybe do it full time? When was it?
Well, honestly, when I bought that first property, I gave myself a 5-year goal. I said, within 5 years, I want to be at a point where I have that option to leave my W-2 if I can, right? So it was a big goal. I didn't think it was honestly even possible, but I was like, I gotta at least do everything I can to try to make it happen, right? So it was the path that I chose at the time. I was like, I'm gonna keep buying fourplexes because I could get the most doors I can with a residential loan that therefore can provide higher cash flow. I did not understand enough about commercial, and I didn't have the ability to even really do much commercial because of the down payments those are going to require and everything else involved. I was like, I'm gonna keep buying fourplexes. That was my plan. It took about a year and a half later before I bought anything else, and I bought 2 fourplexes as a package, in this time out of state in Arkansas, because everything I was trying to buy here in my area locally, I kept getting outbid, and just to the point where the numbers didn't make sense. I was like, who's overpaying by $100,000? That's crazy. But so I was like,
now you probably wish you would have bought.
Yeah. Of course, hindsight, I'm like, yeah, I would have made a great investment on that. But I was at the time focused on cash flow. I was like, it's not going to cash flow. If it doesn't cash flow day one, I can't take that risk. I can't support the payments. It's got to cash flow no matter what day one. That was my primary goal. And so if it didn't cash flow, I had to look away. If it's something I could see that could maybe barely cash flowing, I could increase that cash flow in the next 6 months and make it better, then yeah, or at least would look at that. But in most cases, in order just to get the property, you had to overpay by so much that it's just gonna be negative cash flow for a long time. I'm like, I can't take that risk, right? So I started looking out of state, and I got 2 fourplexes I bought as a package deal in Arkansas, and I did use a commercial loan on that, but they had a 15% down payment to do that. So that that's what made that possible on that property. The interesting thing is early on, at least based off the numbers again, the numbers look great. I was like, this is going to cash flow well. These are, we'll say cheaper properties compared to here, right? The value, I basically getting 2 for 1 for the cost here. But the reality is that it did not work out that well. And I now tell people that when I hear other people on forums or talking about buying these properties in these cheaper locations where you can buy a house for cheap, I'm like, well, yeah, it sounds great, but in reality, it's usually not that well, because
on paper
there's a reason. Yeah, there's a reason they're that cheap. You deal with worse tenants that may not pay you. You have to a lot more turnover costs, a lot more repair costs, eviction costs, all these other things. Like I ended up not really making any money on those properties. So I actually just sold them this last year in August of 2022. After each year go by, I'm like, give me another year, give it a chance, because these I closed on those 2 in I think December of 2019. So essentially right before COVID stuff. So I was like, or was it 2018? No, it was 2018. Yeah, I closed those 2018. So 2019 was, okay. It wasn't too bad overall. But then of course COVID hit in 2020. Had two tenants that pretty much went almost entire year without paying, couldn't evict them. By the time we finally did get rid of them, I had to completely renovate the units, spend thousands on them. So it was like, we're past COVID now. I give it one more year to give it a try, see if we can get turned around. We even got some Section 8 on there to help, if that helped with that, people paying, but it didn't really. We still had problems, still had evictions. And so finally got to the point, like, this is not worth holding on to any longer. I just need to sell these. Even if I get nothing out of it, just to put my money into something that does make money. Of course, by this point, I'm now with what we do now with Happy Camper Capital. So I took everything I got from those properties when I sold them and put them on these campground deals where I will get cash flow and I don't have to deal with tenants. But yeah, so that was my, I guess, second and third property bought together as a second deal, year and a half later. Then after that's when things kind of took a shift, kind of unexpectedly. Again, I was planning just to keep buying fourplexes, but I had these. I'm what I'd call opportunistic, right? I don't have like my blinders on and say I'm only going to focus on this and nothing else. Like I know people that are like that. They'll say they only look at, say, multifamily or only self-storage or whatever. They don't look at anything else. I'm very different in that aspect. I look for opportunities. If something looks great, if someone's going to provide the returns I'm looking for, I don't care what it is, as long as it doesn't go against my moral perspective or my moral compass on that. So I'm like, so this opportunity came up to flip some land, just buy some land and flip it. I did not have any cash to do it, so but there was an opportunity where what was going on here. So I was like, let's get it under contract. Zero earnest money down on it. I was like, what have I got to lose? Let's give it a try. So I got it under contract, and then luckily found a partner who understood the area, knew what was going on, had connections to money, so did a joint venture on it, and he brought his investor capital to get that deal done. The plan again was to hold it for about a year and sell it, but unfortunately, again, the year that took place was COVID now, so we had to hold it longer than planned. But again, it was an opportunity to get a deal with zero money out of pocket for me. And then not long after that, I went back to that same broker and asked if there was more lots available. I found out there was another one still available down the road, a smaller one. So kind of the same thing. I got it under contract. This time I did not want to just flip it though. I wanted to build on it. So I've never done any kind of construction before, but I was like, there's opportunity here, right? Wow. So in talking to the broker, I was first thinking about putting in some like luxury townhomes. But he told me about all the development that's happening in the area. There's a demand and a need for commercial space, like retail offices and whatnot. So I did some calculations, ran the numbers, kind of comparing the cost to build the townhomes plus the rents they would get, then the cost to build these commercial spaces and the rents they're going to get. And surprisingly, the commercial actually looked a lot better. It wasn't like a huge difference, but enough, it was still better. But I was like, overall, I'm also now not dealing with tenants and evictions, right? These are going to be businesses that are going to pay triple net lease type stuff. Like, man, why would I not do that? So same thing. I got on contract, found a couple partners that saw the vision, had the capital to bring, and we started going that process to get that built. And as we are now in early 2023, in about in February of 2023, that should be completely built and ready to go. And once it cash flows, it's going to be a great cash flowing property as well. And of course, tremendously increase in value, which unfortunately, the time when we started looking into it, the construction costs, of course, went up a lot, like almost probably 50% higher than what they were when we first started looking at it, when it cash flowed even better. But it was still a great deal, even at a higher cost. And I was like, again, just seeing the opportunity. But then those things kind of led me to what I'm doing today. I mean, I got involved with another team that does build to rent multifamily. So we build like, large 800 unit development projects. We bring again outside investors to invest with us. Of course, no cash flow up front, but great equity returns here in the somewhat short term, and then eventually even infinite returns for investors once we do a return of capital and you still hold equity in the deal. So that was what my next thing I got into. From there, I started looking to traditional, say, value add multifamily. That was my still goal. I wanted to get these normal value add multifamily deals, a joint venture on some smaller ones. But everything I looked at between, let's say, early 2021 through 2022, nothing really would beat the returns I was looking for. I'd say between 2020 and 2021 when I was really looking and searching, and
prices went up and everything was just overheated.
Prices went up, and people, once they got past COVID, were hot to buy. Like everybody was like super overheated. Everybody's getting kind of like when I was buying fourplexes and people were overpaying for properties. Like people are now you're competing to buy a multifamily property and overpaying to get it, which therefore reduces your returns and increases your risk.
Yeah.
And I was like, man, I'm not that risky of a taker. I was like, that's too much risk to me. And so I was like looking for, and not just to buy it, but also just to invest. I'm like, even if I'm an investor in these deals, the cash flows they were offering were very slim, like say 4 to 6% maybe cash to cash. I'm like, I going back to my early education days in bigger pockets. I'm looking for double digit cash flow returns, right? Those fourplexes I bought were all, especially because I got with such low down payments, they were like 30 to 50% cash on cash. And so I'm like, I know those numbers are not probably possible.
Those days are gone.
Right. I know it's probably not possible to get those, but it's like at least you got to get 10%. I mean, taking 4 or 5, it's like that's not worth the time. Or so anyway, so I was like not finding anything and looked at other syndications that were available. And again, I was like, these returns are too slim. I'm like, I'm almost better off just investing in the stock market. Go buy
Yeah.
some Tesla stock or something, or follow the Reddit guys that push up GameStop or something. Take that kind of a risk. But
Yeah.
so I was like, there's got to be something else out there. So I kept patiently looking and researching and listening. I still listen to podcasts. And one day I just happened to hear on a podcast somebody else talk about these RV campgrounds, and I was like, that's interesting. Something I'd never heard about before.
Right.
Where I live, I'm like an hour and a half away from the Yellowstone Park. It's a big camping area. Many of my neighbors have RVs, and so I'm like, there could be something there. So I wanted to learn more, get more of an understanding of it. Initially, my goal was to just kind of get my foot in the door. I was like, if somebody else is here buying campgrounds, there's plenty of them around me. Maybe someone wants to buy here in this area, something close to Yellowstone. I could be their boots on the ground, go take some pictures or whatever. Just to get maybe even 0.5% of the deal, just for being some kind of help to it.
Right.
And just so going to these different networking events and webinars with people who are in this space, I started just communicating and making comments on on forums like on Bigger Pockets or on LinkedIn. Eventually got connected with a couple guys that just bought their first property, and they were looking to expand and grow their team and to do more. And so we started talking, discussed their goals and their I guess intentions, and of course discussed where I was looking to go and what I want to do, and everything seemed to align. And so they actually invited me to join with them and join the team of Happy Camper Capital. And I was like, you know what, this actually sounds like a great idea. The way I saw it, I was like, if I could pass on this, keep going after multifamily, and probably have no more luck than I had the previous 6 months before that, or I could take this chance.
Yeah.
And possibly have an opportunity that I may not
Another
ever get again.
opportunity.
Yeah. So the way I looked at it, I was like, am I going to look back 3 years from now and regret not taking that chance? So I was like, what have I got to lose? Might as well give it a try. If it works out, awesome. If it doesn't work out, at least I give it a try, and at least now I know something else of some kind of other kind of asset class. But
Right.
I was like, I didn't want to miss that opportunity just in case.
Yeah.
And luckily for me, it's actually worked out well. I've actually I love this asset class. I love talking about it because it's what's great about it is when I'm in a group of other multifamily investors or multifamily syndicators, even, this is something that stands out. It's unique on its own without me ever have to be so special to draw attention to me. It's like, hey, if we got 20 other guys talking about the multifamily deals, they're all different about the same average returns. Now I've got something different, these RV resorts that people have probably not heard of and delivering much higher returns. That alone was going to get people's attention to come and want to invest with us.
Yeah. And it's interesting because you started it looking for cash flow properties. As soon as you found that you cannot find those properties, you moved to new construction.
Yeah.
And new construction is basically, they're saying that it's the most value added property because you take something and you create something, so you have the most value added. You looked for something else and you found the RV parks, which is kind of similar. It's a business and it's kind of similar to Airbnb properties. It's a more cash flowing, cash generating machine, I would say, because it creates cash flow on a daily basis. And I love that it's a real estate and a business. And I love that. So what kind of parks are you right now investing? What's the size? Where are you investing?
So we buy properties that are across the country. So we're not in any specific region or area. Currently we have 5 that we've closed on so far. We have 2 in Iowa, 1 in Missouri, like the Ozarks area. We've got 1 in Louisiana, near Lake Charles, and 1 in Indiana. And we have a few more that's in our deal flow right now that are coming down the pipeline. So we have a goal to close on between 8 to 12 this year. And each year, hopefully expand and do more. But for us, our 2 basic buy criteria is the size and location. We're looking for something that's at least 100 existing campsites and up. And then within about a 2 or 3 hour drive of a major city. And the reason for both those obviously is doing it as a syndication that, we have to have enough sites on hand already that produce, like you're saying, that income, that cash flow to provide back to our investors while we do our value add, because something less than that just does not work enough for the management costs that are involved. The properties we typically are buying are off market, first of all, and they're typically, we'll say, mom and pop. So the owner lives there on site and operates it, so they keep their expenses down considerably. Well, we're now replacing that owner operator with several staff members that need to therefore be there to operate. So to cover those kind of costs, we have to have enough spaces to really have the income to cover that.
Right.
But part of our value add is the big part is we want to expand the properties. We want to add on more RV pad sites, more cabins, yurts, or glamping options. Add on more amenities, things that are going to attract people to come there. So we could take a property that's, maybe we'll say 200 existing campsites, and we'll convert 600 campsites, possibly,
Wow.
or maybe not that many, but it all depends on the property, how much land is available, and the demand for it in the area. But the big part of it also is just the amenities, what's going to attract people to come there.
Right.
So like, for example, we have, if we have something that's on water, like on a lake, we'll have, like boat docks for people that go boating or fishing, possibly an aqua park for people to come and play on that, possibly ATVs or horseback riding kind of things, all these different outdoor activities that are going to bring people there. We even have some that we will put on like a concert events to bring people out for concerts
Love
or
it.
things, so not everybody's there necessarily coming for camping, but they'll come there for these other activities, to go play on the lake, go to a concert, whatever it may be. And while they're there, they'll spend money on their stuff, maybe decide to stay there overnight in one of the cabins or whatever else. And so yeah, they're very high cash flow generating properties. Like you said, it's very similar to like an Airbnb, but at a multifamily scale.
Yeah.
And the location, the reason why we buy them within about a 2-hour drive of a major city, is that in particular right now, with gas prices high, owns an RV or is towing a big fifth wheel trailer behind their truck, they're going to get very low gas mileage. So they don't want to drive a cross country trip like from say Montana to Florida, but they're willing to drive a couple hours to go have fun, right? So that's kind of why we have that built-in user base. Everybody that owns an RV or camper already, or just people want to go out and have fun, are most of the times willing to drive 2 or 3 hours to do that. So that gives us that built-in customer base to go to these properties and keep them occupied and keep the cash flowing.
Right. And you're absolutely right, because when I go to an RV trip, I look for areas that are 2-3 hours for me. And it's a completely different area, but it's very close to driving. It's an amazing business in Florida, basically. And I'm from, it's a thriving business. The issue is that we can't find good deals because everybody wants to buy them, and they make so much money. So
we had one under contract about a year ago, and it ended up falling through, unfortunately. But yeah, we're planning to get back there soon, and possibly even build some ground up ones there too. So
right. Yeah, it's a good business. So, I mean, in this economy, everybody's talking about recession and things like that. Do you see any risk that kind of business right now?
The funny thing is we don't. Honestly, this is a we'll say fairly recession resistant industry, and the reason for that, there's a few perspectives depending on your I guess the way you view it. On one hand, you've got these these RVs and these fifth wheel trailers, not cheap things, right? These are luxury items. So you have to have a high disposable income to even buy them in the first place. So the people that are buying them are in most cases, higher income earners. So they're not as affected by a recession anyway, right? So they're still going to spend money, still take a vacation. And again, they have this possibly, $500,000 toy sitting in their driveway. Maybe they want to use it. They don't want to just leave it sitting there.
Yeah.
And so they're going to still go out and use them. So they're going to still be going to these properties to have fun. And then you get the other spectrum, we'll say the lower income earners that maybe don't have even a high-end fifth wheel or anything, but maybe a small camper, or even just, they go tent camping or something. They still want to go out and have fun too, right? People, no matter what's going on, people still want to have a vacation. They might cut their trip and not go to Disney World or something, but they still want to get out and have fun. So they'll go to some place nearby, like you're saying, a couple hours drive away. Let's go camping, have a tent or even rent a cabin, maybe for like a family gathering, maybe. But they're at a place where they can do fun things, right? Go, play in the lake, horseback riding, go to a concert, whatever, saying multiple different things that can be on these properties and not spend as much money. So for that reason, from both perspectives, they're still going to be occupied by people no matter what's happening in the economy. And then even then, we'll say people stop buying RVs, but there's still plenty of them out there already that people are still going to be using. As is right now, the current RV owners, there's not enough spaces nationwide for them all to go. If everybody decided on the same weekend, let's all go camping, they're not going to have a place to go.
No.
They'll all be filled up. So there's always going to be the demand there. And if somebody else decides to sell their RV, well, somebody else is going to buy it, and they'll still want to go use it. So the demand is always there.
Yeah, it's a great business, and it's good what you're saying, because people that have high disposable income, they want to use their RV. But people that lower income, they still want to go out and have some fun, and the RV sites they're ideal for that. I want to move on to the 4 success questions that I have for you. Are you ready? All right. So you've been at this business or looking at real estate for quite some time. So what are the 3 best success habits that you have in your business?
Obviously, what I was doing early on is changed what I do now. But to kind of combine both, somebody that's just starting off or somebody that's experienced, is a few things. I'd say number one, the one that I learned that probably could have advanced me a lot further faster had I been doing it was the networking. I was not active on social media. I was not on LinkedIn, Facebook, any of those things initially. The only place I was active was on Bigger Pockets. And so I was still sort of networking there, but not to the extent I do today. So had I been doing more networking back then, I think I would have made more connections and be able to move a lot faster had I done that. So definitely network as much as you can, live events, virtual events, whatever it may be, just to get people to know who you are, know what you're looking to do, find somebody else that's looking to do the same, and maybe even find partners. So that's definitely essential. Another thing is just to to learn your numbers and learn how to analyze. Again, early on, that's all I did was I analyzed hundreds of properties before I bought that first one. I need to be totally familiar with it, totally understand it, not just find something that this sounds good. I didn't know the numbers are solid,
Yeah.
right? So so know your numbers and analyze it. And the other thing for me personally that is a big driver for me is not so much of a business side, but a personal thing. So I do a lot of prayer. I'm very religious. I hold prayer is a daily habit for me. I seek guidance and help from a higher source that can lead me to where I need to go and what to do next. And I fully believe that I would not be where I am today if I did not have some divine help, we'll say, to lead me along the way.
Yeah. And those are great 3 points. Networking is huge, especially in real estate and in any kind of business. Networking, you can learn so much better things when you network. Run the numbers, especially like you said, you went and buy stuff out of state. You ran the numbers, but you didn't know exactly what's going on. And it's a big point when if you network and you run the numbers, you can put the picture together and make sure that the investment works well. And spiritual, of course. I mean, you always want to, it's like you put stuff on the wall and you look at it. It's the same thing if you pray, if you put the goal. Yeah, I love those. So what are the resources that you use? I mean, you told us about Bigger Pockets. Are there any other resources that you use in your business?
Yeah, well, honestly, these days I'm not as active on Bigger Pockets anymore. I still am there. I still do some things, but I'm definitely nowhere near as active as I used to be. I'm now much more focused on LinkedIn as my probably number one source for me to network and find people. I'm active on Facebook as well, but it's a different type of audience, I guess. So
Right.
And again, I never wanted to be on Facebook. I was not on Facebook until about a year ago. So I'm still fairly new on Facebook, but LinkedIn has been a great resource for me to learn about these virtual events that I was not going to before. Finding partners, connecting with people, connecting with investors. Getting my name, I guess, out there for me personally and for our team, Happy Camper. So LinkedIn has been for me probably my number one resource for all the above, finding investors, finding partners, finding deals. I have enough of a network based people that know me, know what we do, that I have people that send us deals. Hey, I heard there's an RV park here, so they'll send it to us to look at. So so definitely, I think for me, network or LinkedIn is a huge resource for at least for commercial real estate investors. Probably if I was not on there myself, I probably wouldn't believe it. I'm like, isn't that the business thing, but yeah, it's a huge platform for real estate investors on there.
Right. Yeah. Both LinkedIn and Facebook, and both have groups. Both have a lot of people that network and share their ideas. So it's on a like minute by minute. You can see things every minute change. So, and those are two great resources. I use them every day, and they really help my business. So the next question is that I have: what are the 3 tips that you have for people to make money these days in real estate?
Without sounding self-promoting, I'd say invest in RV resorts. But
no, I mean, it's great.
Honestly, that it's
because people doesn't
yeah,
know about RV resorts. They
exactly.
think like it's...
I talk with investors and even we'll say experienced multifamily investors. They all see the writing on the wall. And it's something I saw myself a few years ago. I'm like, the returns are getting slimmer. The risk is getting higher. People that thought they're going to be refinancing this year with low interest rates are not happening. So people are looking for something better. So I'd say, first of all, I guess keep your eyes open. Don't be pigeonholed into say, I'm only going to invest in one type of thing and nothing else ever. That will cause you to lose out on many opportunities, especially depending on what your goals are, obviously. But if your goal is to create income and wealth, you have to be open to other ideas that could help you get to that goal. And then, so I guess along with that would be, be open to look into RV resorts, even if you don't understand what it is or how it works. Talk to somebody in the space. Contact me and let's talk about it and to see what your goals are and if this meets your needs and how you can possibly get involved. I guess I'd go with also not be afraid. There's a lot of fear going on right now in the marketplace. And again, even for me starting out that first property, I was afraid. But if you don't get past those fears, you're never going to advance. You can't get to where your goals are if you let fear hold you back. So there's being cautious is smart, right? You got to be cautious and not be, make dumb mistakes, but don't be afraid to take action. If there's something you've analyzed enough that you feel confident about, you trust the numbers, you trust the people that are involved, take that risk, take the opportunity, because everything's a risk anyway, but you're also at a big risk for not taking those opportunities.
Right.
You're higher risk of not meeting your goals if you don't take chances. So that's my 3 tips, I guess.
Yeah, definitely. Cash flow business and RV resorts, they make a lot of cash, and take risk. I mean, if you want to get into real estate, you got to take some risk. My last question for you for the day. People that have full-time job but still want to invest in real estate, but they don't want to be in the operational side, what can they do? How do they do that?
Yeah, well, again, so me personally, I did start investing when I had a full-time job, and having one property wasn't so bad. As I started doing more and getting more involved with other stuff, it started to consume a lot more time for sure. So it became more difficult. As where I'm at now, as somebody who just left my W-2 job, actually just say retired or quit my W-2 at the end of 2022. Now I'm full-time real estate. Where I'm at now is still not where I want to be. I'd say the next 5 years, I want to be 100% passive. So that's for people that are busy, don't have time to find, analyze, get bank loans, all that stuff. Being a passive investor or say a limited partner in a syndication is definitely the way to go. That's where I want to be the next probably 5 years. Don't want to be even an active real estate investor anymore. I want to just be totally passive, have complete 100% of my time back for me and my family, and enjoying life. So, but if you're at the point where you like your job and it's busy, keeps you occupied, say doctors or lawyers, for example, that spend a lot of hours working, you have the disposable income, put that money to work for you. Start investing passively. Again, I'll pitch for RV resorts, going to get you higher returns than you're seeing in other stuff right now. And maybe eventually you can get to the point where you have enough income from these passive investments that you could even possibly leave your job if you want to. Or, I tell people, even if much you love your job, you don't necessarily control what happens, right? Even if you're the boss yourself, you could get injured, get sick, get laid off. Something happens where you are no longer able to work. Well, then you definitely want to start setting up now those income sources that you can replace your income at some point if those things happen to you. So that's the advice is just start investing now, start being a passive investor, start building up that income stream at some point. Even if you don't ever need it, it's great to have more income anyway to help pay for your vacations or whatever you may need, or take the additional income and just give it away, donate more. There's multiple things you can do with additional income, and but start now, start investing as a passive investor, and you might be surprised where it takes you.
Right. And I love your comment that if they can't work, they still have income coming in. And it's a great point, because people think that if they go to work and everything is fine, they're going to still make money, they don't need anything else. But you can never plan for something to happen. And if you invest passively and you have money coming in every month and something happened in your job, you still have something that comes in. And I love that point. So yeah,
even going back to that, at the beginning, I talked about those big, financial firms. People worked for Bear Stearns or sort of, they had a great secure job, paying well, and all of a sudden they're out of business. They don't have a job. So yeah, you got to be prepared. You never know what could happen.
Yeah, and that's a great point. So thank you so much. This was amazing, and it was a lot of knowledge and a lot of information. But I'm sure our guests, our viewers, will love the episode, and they'll get a lot of advice. It was great, and yeah, and I learned a lot. By the way, I was going to buy an RV park, but the numbers didn't make sense, and I was like, how am I going to manage this? So I decided not to do it.
Yeah.
So
yeah. Well, you can come invest with us. We have our own management company as well. Beyond Our Camp manages our campgrounds. We oversee it all, and we provide great returns for our investors. So you passively invest and get great returns and enjoy it.
Definitely. I mean, if you have opportunities coming up, send it to me. It's me. I have also friends, because we all love to go to RV parks. We all go to those, so it's a good opportunity. Yeah. Thank you so much.
Appreciate your time. Good talking to you. And
yeah. So if people want to get in touch with you, how can they find you?
Yeah, for sure. Well, as I said, you can definitely find me on LinkedIn. I'm active there. Also Facebook. But you can go to our website, happycampercapital.com. Go to the About Us tab. You'll see my name and picture on there. If you click on that same screen, you can actually schedule a call with me right there. There's a button at the bottom right that says, schedule a call with Don, and you can set up a Zoom call and we can talk about it. So yeah, that's how you get a hold of me best.
Great. Thank you so much. So I'll see you.
Thanks a lot.
All right. Bye-bye.
Thank you so much for listening to this episode of the Successful Investor Show. If you're enjoying this podcast, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. That helps others find the show, and we greatly appreciate it. Once again, thank you for tuning in, and we hope you'll join us on the next episode of the Successful Investor Show.